Hello everyone, and welcome to the Quantpedia Explains Trading Strategies video series. Today, we will speak about the best performing value strategies.
Hello everyone, my name is Radovan Vojtko, I'm CEO of Quantpedia. Today I would like to talk and discuss value and value strategies. Probably most of you heard about the value factor, so we buy or go long stocks that are unloved and very cheap and very boring. And we short or sell stocks that are very popular and very expensive, like Tesla. So that's how the value look like. It's a very popular strategy, and most of the people think that there are only few variants of this basic strategy, but nothing can be more from the truth. So here in our database we have 60 different variants of the value strategies, because the value is working very well in all of the asset classes, so in equities, bonds, stocks, ETFs, commodities, currencies, etc. In this video we will review the best performing value strategies in equities. I will show you some examples, and I will show you how the value strategies can be very different from each other. We will see if we can have some good ideas for new strategies. Here is our article about the best performing value strategies. In the article there is a way how you can find and sort the strategy by yourself by using Quantpedia Pro. The most important thing that I would like to show you is what is the correlation of the value to US equities. As we can see, the usual value strategy is not very well correlated. The usual correlation is about close to zero. And also when we do the correlation between value strategies among themselves, you can see that also the average correlation is around zero. Blue parts of the chart is the correlation that's close to zero, and the yellow one are the one that are significantly higher. So you can see that we have a lot of blue parts, so average correlation of the value strategies among themselves is close to zero. So what does it mean is that we can create a very interesting portfolio. We can gain from the diversification. We can be diversified very well among different value strategies and among variants. So let's get straight to the point. Top performing value strategies, strategy number 10, the value book to market factor. It's classical FAMA and French factor. That's the article from year 2022. Yeah, in the summer, the year-to-date performance was positive, 3-year performance was negative. This 3-year performance and 5-year ratio, it shows the fact that the value had really bad years 2018, 2019, and 2020, and after that the value factor had significant turnaround, and the strategy once again performs very well. The strategy is very simple. It's FAMA French factor, so we are going long high book to price stocks, and we short the opposite. So it's very simple. So value strategy number 9 is /TEV measure effect. So what does it mean? We are using different value metrics. Instead of buying book to market ratio, we use the measure of earnings EBITDA. So it's earnings before taxes, depreciation, and amortization, and we are comparing this earnings measure to total enterprise value. So that's a different way how we can define the value. Well, but it's a little correlated to the previous book to value factor. Another is intangible factor in US equities. So what does it mean? There is a very rapid shift or transition from a traditional economy that's dominated by physical asset factories, etc., to knowledge economy. So it's fueled by advancements in technology. More important in the moment is not how big your factory is and how many employees do you have, but how strong is your brand and how is your intangible value strong, or how strong is the intangible value of your company. So what we can do is that we can buy high intangible stocks and we can short the opposite. It will give us interesting performance. What is the most important thing is that we will have very interesting performance also during the years 2018, 19, 20, which are the years where the traditional value factors were not working very well. So that were the first 3 strategies, and in another article, the link to this article will be also in the description of the video, are the other 7 strategies. So let's go to another article. And let's go to factor number 7 or strategy number 7, getting the following 9 stocks. What the strategy suggests is we are using different approach to value. We combine different measures of value, debt to equity ratios, and price action. And we are going to buy the stocks that had a very significant drawdown in the past year. And we buy those stocks. So those are the stocks that are called falling knives. Those are the stocks that are very unloved by the market. we are going to buy them. It's a very volatile strategy, but it had a very nice performance during the last few years. And then we have a productivity of cash effect in the stock market. So what is the productivity of cash? If the company's productivity of cash is very low, it may indicate that it's value opportunity. So it's a company that's slowly moving, it has very low productivity, but it means that it's also usually underpriced. The firms that have a very high productivity of the cash are usually sold at premium, so it may decrease the performance of these stocks. And if you buy the stocks that are not very productive, it's a typical value stock, so it's also typical value opportunity with an interesting performance, especially in the last 2 years. And then on the spot number 5 is the net payout yield effect. So what is the net payout yield effect? Everybody knows dividend yield. The dividend yield measure was considered a very strong predictor for future equity returns. So a lot of the people like to buy stocks with a high dividend. But what the current research shows that it's not significantly predictive at the moment, and there is higher significant predictability when we use the total payout yield. What is the total payout yield? So we not build our strategy just on dividend yield, but we also check what is the number of stocks that are bought back minus the number of shares that were issued. So we are also looking on stock buybacks, and we combine information about the stock buybacks, the dividend yield, and we get the total payout yield, and then we sort stocks based on the total payout yield. That's a very interesting strategy. That's also from one of the value strategies. So then another one is profitability factor combined with the value. We go along high profitable and low value stocks, and we short the opposite. So we short low profitable and stocks that are highly expensive. So we combine the value with another type of the fundamental factor. In this case, it's profitability. In our case, it really makes sense when we buy stocks that are not just cheap from the book to value perspective, but are also highly profitable. And we are shorting the stocks that are not profitable at all and that are really expensive. Then we have relative value factor in the US. We are going long, low industry adjusted relative value stocks, and we short the opposite. So this relative value factor takes a different approach to value. Instead of identifying these valued companies just individually, we are trying to do the industry adjustment. So we are looking how the stock is cheap compared to industry average, and how the stock is expensive compared to industry average. It's completely uncorrelated to other value trading strategies, and it's really, really interesting addition. Strategy number 2, impact of intangible assets on book to market. Once again, we are not just looking on high book to market stocks, but we are looking what is the effect of intangible adjusted book to market. So it means we are adjusting book to market via the intangibles, which cannot be ignored, as we mentioned a few strategies ago. And the last one, the strategy number 1, so the best performing in 2022, the long-term price to book ratio effect combined with the momentum. So once again, winner is we combine the traditional value with the momentum. So we are going along the high book to market stocks, and that are also high momentum stocks. So instead of just using the fundamental ratio, we are also looking at the price action that guides our steps. And that's top 10 performing value strategies out of the 60 for the year 2022. What we can do is that we can build a nice portfolio out of the 10 US equity value strategies, and the portfolio has significantly better grab ratio, significantly lower maximal drawdown than each strategy individually. So once again, we can see that there is a high added value when we correctly diversify among multiple different strategies and not just use the one value strategy. Thank you very much. I hope that you liked this video, and I hope that you join me next week. Thank you. Bye-bye.
Interested? Then pick another video to learn more, or subscribe to Quantpedia Pro and try how our analytics and reporting significantly save time spent on quantitative research.